Hey, welcome back, my fellow humble investors. I need you guys to do me a favor before we get started with this. I started this YouTube channel back in January of this year, 2021. And I currently have, when I started this, I had a goal of getting at least 100 subscribers per month. January, we ended up about 80. February was pretty good. Currently, right now, I'm sitting at about 181 subscribers. So what I'm asking, the favor that I need from you guys is, if you like the content and so forth, do me a favor, go ahead and subscribe. I want to try to get to at least 19 subscriptions from this video that take me at that 200 subscriber point. So that'll take care of January and February. What we have like 2 days left in the month of February. Today is the 27th. Actually, no, 1 day left, today and tomorrow. So 1 day left in the month of February. So anything you guys can do to help me out, I will truly appreciate it. For the 181 subscribers that I have, guys, thanks a lot. I really appreciate you guys and the support that you have, the positive comments that you wrote and so forth. So thank you for that from the bottom of my heart. All right. Before I really get into the talking about our favorite company, HUMBL, I just want to tell you why I have this YouTube channel. I guess technically right now, I'm obsessed with YouTube. I watch a lot of YouTube, probably more YouTube than anything else over the course of the last 4 to 5 months now. I decided to start this channel as to talk about personal finance, to help people increase their financial literacy, as well as to continue to learn myself, because I'm still a student in all of this. I just wanted to go ahead and share some of my experiences, some of the things that, some of the ways that I do things. I was planning on talking about everything dealing with personal finance, from financial planning to saving to investing, talking about credit management, the spending, the giving, the tracking of your personal finance and so forth. I wanted to talk about all of that. But if you look, probably the vast majority of my videos is focused on investing. This particular video, this series of videos, I had no intentions on doing it. Back in January, when I ran across HUMBL, or actually TSNP, I found it and started to do that, invested in it strictly as a swing trade. That was it. My intentions were to get in, get out. Get in, get out. All right. And, drop it, move on to something else. However, I got in back on, I believe it was January 11th, at the cost basis back then was 17 cents. And while I was in the trade waiting to look for my exit, I really just started doing more research about the company. Also, what's going on why did this company do a reverse merger with this company, the Sorrow? Why did they do that in order to come public? And as I started finding out more about HUMBL, this trade changed. Everything changed. It went from a swing trade to a long-term investment, one of those buy and hold investments, because I see the potential of this company to be extraordinary, and I was not going to pass this up. So as a result of that, I started to continue to accumulate more shares, to build up my position in HUMBL and so forth. So I'm with all of you guys. I'm an investor. I am a proud owner of this company, even though it's a small bit, but still, I am happy to be part of this company. And as a result of that, a lot of things have changed, especially recently. A lot of things have changed recently. We've had the ticker symbol change. We had a reverse split. We had the investors call. And along with all of that, the whole purpose of this particular video today is to talk about why I think HUMBL went the route of a reverse merger in order to come public. But before we get into that, and I'll get on the board once we start talking about that. Let's talk about this the stock's ticker symbol change. As you know, on Friday it went from TSNP to TSNPD. They added a fifth letter to the end of that ticker symbol there to represent that this is a temporary ticker symbol change, and that the ticker will change to HMBL on the 26th of March. Now, my last video, I made a huge mistake, and guys, please, I beg your forgiveness. I deeply apologize for the mistake that I made. On the last video, I said that the HUMBL, it was going to change to HMBL on the 6th of March, not the 26th. And of course, the viewers seen that, they commented on it, and I went back to the article that I got this information from, and true enough, the 26th of March was there. Why did I write the 6th of March and spoke of the 6th of March on the board? I don't know. Maybe it's old age. I don't know. But hey, I truly apologize for that mistake on my part, and beg for you guys to forgive me on that. All right. The second ticker change is going to be on the 26th of March. Well, it will go from TSNPD to HMBL. Got it now. All right. Let's talk about this reverse split. That reverse split caught everyone off guard. Definitely caught me off guard. My initial thought on that was I was a little ticked off because I was with another penny company that did what was it, a 1,000 to 1. For every 1,000 shares you had, it converted to one reverse stock split, and it did that, and within 6 months it was back to the original stock price prior to the split. So that's the first thing that came across my mind. But this company, HUMBL, and that other company, they're not the same. They're not the same. This one here is definitely a legit company that could have went other routes in order to go public. So I get it. And probably one of the best things that happened also with this company, that's another thing with this company here, is that they're definitely transparent and they keep in touch with the investors. This is the third investor call that I'm aware of. And they talk about what's going on within the company. And that gives me a lot more confidence within this company here. During that investor call, you had George Sharp, who came out and talked about the ticker symbol change as well as the reverse split as to why they did it. And it made all the sense in the world. I mean, even prior to the conference call, once I really started to think about it, I understood why they did it. But he pointed out one thing that I it's like, oh, okay, that even makes more sense, to almost put a short squeeze on those the people who were shorting the stock. So it's like, oh, okay. That's also probably why we had some price run up on Friday or yesterday as well, was because of that. So good job. I get it. Is that going to keep the shorters out of HUMBL altogether? No, it's not. But it's probably going to help stabilize the price of the stock and give everyone a true idea of what the stock may be worth. So that was good information. When Brian Foote got on, he gave us once again great information, what's going on with the company, the direction of the company. One of the things that he talked about that was huge news, and that was the acquisition of Tickery. That $20 million acquisition of Tickery. And After the call, of course, I get on the website and I take a look at Tickery. No, yeah, Tickery. I get on the website to take a look at it, and I like the idea. I like the premise behind this acquisition. Tickery, if you go to their website, they're operating here in the United States, and they're focused primarily on Latin events and venues that are happening throughout the United States. But also, when you look at the bottom of their website, you see that Mexico, Colombia, Peru, Chile, all of those are coming soon. So, and you think about it, the world that we're going into right now, the key is going to be contactless payment and ordering of a lot of different things. So I like the direction that they're going with that. I think that it's going to actually add a lot of value to the company that already has a lot of value. All right. So that's it. That's just my bringing you guys up to date on that. And I tell you what, let's go ahead and get to the board real quick so that I can share my thoughts as to why HUMBL went the route of a reverse merger in order to go public. All right, let's go to the board. All right, let me give you my thesis as to why HUMBL chose to go public through the route of a reverse merger. Now, we all know that a private company, when they decide to go public, they're doing it in order to raise money. You know, why go public? To raise that moolah. All right, so there's three ways that a company, a private company, can go public. Right? Realistically, I was just aware of two. I think there's another one called going direct, IPO. But let's just talk about the ones that we're most aware of. The first one is your traditional IPO, initial public offering. Now, they're doing that in order to raise money, but one of the issues that I personally have, that I see when it comes to the initial IPO, is that everybody gets to eat first before the retail investor. You're talking about the insiders. The insiders I can see, you know, those are the founders and the people that help build the company. But you got your venture capitalists, you got your accredited investors. They all eat first before the retail investor, the little guy, has a chance to eat. To give you an example of this, one of the most recent IPO that companies that went public through a traditional IPO was the Airbnb. That was back in December, I believe, December 10th. But think about it. I remember very vividly on the 9th of December, the day prior to, they were talking about it was going to, their initial price was going to be $68. Then on the 10th, I think it was above $140. When it opened, above $140. I think it closed out at 144. All right. So even if I wanted to get in, I wasn't going to get into it at that price. But the people who made out, who really made out, and rightfully so, were the insiders, venture capitalists, the accredited investors, who all was able to get into that stock at a much lower price, and they're the ones who ate first. Now, with a traditional IPO, going that route, it is a much longer process in order to go public, to hit that public market. 6 to 12 months. It's also, from my research that I found out, it's actually more expensive for a company. Now, the other route that we're seeing a real upsurge in, and it's been around for a while, but we've seen a huge upsurge in, is SPACs, special purpose acquisition companies. What they are, they're nothing more than a blank check company. They are a public company that's there to raise capital and to find a private company to merge with. That's the whole purpose. Now, the way it works is while they're a blank check company, prior to them finding a company to merge with, their price range is normally about $10 per share. That's normally the range. But in addition to actually having the stock in order to raise capital, they also issue warrants. And normally the warrants are about 50% lower than the stock price. That's initially. Now, once they find a company and the stock price starts to rise, so does the price of the warrant. And the warrants are probably going to catch up pretty close to the stock price. Now, the beauty of this is that you can buy not only the stock, but you can also buy the warrants. Now, I did that with SoFi. I went IPOE. I went in and bought the stock as well as the warrants. Now, these SPAC companies, blank check companies, they have 2 years to find and recruit and to merge with another company. If they're not successful within that 2 years, they're going to liquidate their assets and return it back to the investors. It's pretty good. One of the major advantages to a SPAC over your traditional, it's a faster way to the public market. Now, in addition to that, it also helps out us retail investors. And the reason why is because guess what? We have a chance now to get involved in a company prior to them going public. Or that's one of the ways that we can get involved with a company that's going public. Think about it. If Airbnb went the route of a SPAC, we would have had an opportunity to get in at a much lower price than the opening price of $140 some odd. So the third way that we're going to talk about here and really kind of find out why HUMBL went this route is through a reverse merger. Some of the benefits of a reverse merger is that it's the fastest and the most cost-effective way to go public. This is where you have a private company that decides to merge with a public company. And now what happens in this reverse merger, the private company actually takes over the public company. This is by far the fastest way to the public market. It could take anywhere from weeks to 4 months. It's much faster than a SPAC and definitely much faster than a traditional IPO. Now, the reason why I believe that HUMBL went the reverse merger route is not only for these reasons, much faster, cost effective, but I think that they did this because they wanted to give the retail investor a true opportunity to get in on the ground floor of their company. They could have went the route of a SPAC. They would have started off at a much higher price, still gave the retail investor the opportunity, but think about it. I still would have invested in this company at $10 per share, $10 to $20 a share. I still would have invested in this company if they had went the route of a SPAC. Not only that, I probably would have definitely got in on the warrants as well as buying the stock. So that's why I believe that they went the route. They knew what they had. They had a company that could have went either of these two routes. They chose the route to really give the retail investor the opportunity to get in on the ground floor and really increase our net worth. So that's just my thesis as to why they did that. I'm always wondering, why did they choose a flooring company? I don't see the connection with a fintech tech company doing a reverse merger with a flooring company. So YouTube universe out there, do me a favor. If you know the answer to that, please send that information my way. Put it in the comments, send me a link, whatever you need to do. Get that information to me, because I'm just curious right now. I'm just curious as to how did they meet and why a flooring company? I don't know. All right. So that's my thesis as to why they went the route of a reverse merger in order to go public. Could be wrong. If I am, please guys, educate me. Really appreciate that. I really do. So with that being said, hey, once again, I appreciate everyone. If you like the content of this, please subscribe. At least I need at least 19 of you guys to get me up to that 200 point. So that way I'm on track for that 100 new subscribers every month. Now, the next video that I'm thinking about doing for Humble is what are going to be some of the catalysts for an increase in the per share price. So I'm going to jot that down, and more than likely do another video tomorrow to have that released on Monday. So be on the lookout for that. I really appreciate you guys, and hey, thanks, and I'll see you on the next video. Take care.